I'm deeply sorry about what happened. I didn't ever try to commit fraud on anyone. I was excited about the prospects of FTX a month ago. I saw it as a thriving, growing business. I was shocked by what happened this month. And, reconstructing it, were there things I wish I had done differently?
In today's video, Sam Bankman-Fried, co-founder of the cryptocurrency firm FTX, gave his first live interview since his company filed for bankruptcy. Before listening to him, please ensure to smash the like button and subscribe to the channel.
A young man who made a series of terrible, very, very bad decisions. The less generous view is that you have committed a massive fraud, that this is a Ponzi scheme, a manipulation of the system. And I want to start there because I think that there are so many people who have that question, which is, what is this? And what did happen?
And at the end of the day, I was CEO of FTX. And that means whatever happened, wherever it happened, I had a duty. I had a duty to all of our stakeholders, to our customers, our creditors. I had a duty to our employees, to our investors, and to the regulators of the world to do right by them, to make sure the right things happened at the company. And clearly, I didn't do a good job of that. Clearly, I made a lot of mistakes or things I would give anything to be able to do over again. I didn't ever try to commit fraud on anyone. I was excited about the prospects of FTX a month ago. I saw it as a thriving, growing business. I was shocked by what happened this month. And, reconstructing it, were there things I wish I had done differently?
Is Sam Bankman-Fried stole $2 million from me. Says, Andrew, can you please ask SBF why he decided to steal my life savings? And the $10 billion more from customers to give to his hedge fund, Alameda. Can you ask him why his hedge fund was leveraging long all of these S coins? Please ask him if he thinks what happened was fraud. These are the kinds of letters that I've been getting repeatedly over the past several days. What do you tell this man?
Yeah, I'm deeply sorry about what happened. Here's, the long and short of what happened. And I'll start by saying, just to make a distinction here, you look at the US platform, you look at the international platform. The US platform is a US regulated platform with American users. To my knowledge, that's fully solvent, that's fully funded. And, I believe that withdrawals could be opened up today and everyone could be made whole from that none of these problems plagued the US platform. Then you look at the international platform, for their non-US users. And as the letter says, Alameda Research did have a long position. And the international platform, it's a margin trading platform, it's a derivatives platform. It's a platform where all the clients were, going on, placing something as collateral and using that to put on a position, whether that's a futures position, a spot position, a borrow. And what the exchange was storing was the collateral from all of those positions. Alameda Research was, one of those that put on positions there. And as I try and reconstruct this, over the last month, I have limited access to data, but my view of it, from what I have been able to see, is roughly that, basically, look, a year ago, Alameda had, I think, something like 10% leverage, had something like 10 times the assets of the position that it had on. Over the course of the last year, there were a number of market crashes that drove the value of those assets down and the leverage up. I think it was, to my knowledge, still under 2x leverage, as of a month ago. You look at what happened this month, and in a few days, all out, PR assault, which led to a total market collapse in a pretty short period of time, no bid side liquidity. I think more than $10 billion wiped off in the matter of days. And realistically speaking, no ability for FTX to be able to liquidate that position and generate everything that was owed from it.
But I think the bigger question is, so how is it possible that Alameda had this loan of such a large size?
So there's that piece from the terms of service, but there were a number of other parts of the terms of service and a number of other parts of the platform on top of that. There is the borrow lending facility, where users were lending billions of dollars of assets to each other, collateralized by assets on the exchange. You had obviously futures contracts where there are leveraged positions on. Now, of course, all of this, it's meant to be the case that these are positions where FTX could, if it needed to, margin call those positions and close them down in time such that it would cover all of those, all those shorts, all those liabilities. Obviously, that wasn't the case here, and that's a massive failure of oversight, of risk management, and of diffusion of responsibility from myself running FTX.
But just make this very straight. Was there commingling of funds? That's what it appears like. It appears like there's been a genuine commingling of the funds that are of FTX customers that were not supposed to be commingled with your separate firm.
I didn't knowingly commingle funds. And again, one piece of this, you have the margin trading. You have, customers borrowing from each other. Alameda is one of those. I was frankly surprised by how big Alameda's position was, which points to another failure of oversight on my part, and failure to appoint someone to be chiefly in charge of that. But I wasn't trying to commingle funds.
Told Alameda staffers that Alameda used FTX client funds to cover loans that were being recalled because of the Luna-triggered credit crunch. Carolyn says that she, Sam, Gary were aware of this. How do you square that with what you originally said over Twitter, that this was an $8 billion accounting mistake?
So I'll point to two things. And first of all, obviously, I don't know what anyone else is thinking here. I can only talk about it from what I know, from what I knew. And a lot of this is reconstructing it over the last month. I have limited access to data, but what it seems like happened is in the middle of the year, a lot of, most of the borrow lending desks in the space blew out or closed down. And it seems like Alameda had, margin positions opened with them, and that it likely moved a bunch of that over to FTX this year when they shut down. And that means, I think it was over collateralized positions, but positions that involve substantial size and substantial US dollar size on the borrow side. In terms of the accounting mistake, again, looking through what happened, I think that there is a substantial discrepancy between what the financials were, what the audited financials were, the true financials, what the exchange understood. All of that was consistent, versus what the dashboards that we had displayed for Alameda's account there, which substantially under-displayed the size of that position. And so that's one of the reasons that I was surprised when we dug into everything at how big that position had become.
But you would agree that there is a much more closely connected version of FTX International and Alameda than previously understood. Fair to say?
Yeah, I mean, given the size of the position, I think it was, if not in intention, it was in effect tied together substantially more than I would have ever wanted it to be.
Where you may very well be right now, altogether.
Most of Alameda was not there. I don't live there now, but not there now. I have not lived there for much of the time. But I did live with one or two members of Alameda for a little while. And I'll also say that as I was earlier this summer looking at the relationship, and this is a pretty big mistake in oversight of mine, I was viewing it primarily from the trading volume perspective, because that's what drives our revenue. And so when I was looking at how intertwined are FTX and Alameda, I was looking at, well, what fraction of trading volume, what fraction of liquidity on the platform does Alameda represent? That had fallen off from something like 45% in 2019 to something like 2% this year. But in terms of positions and balances, it was a much larger fraction. I hadn't been looking at that. That's a pretty big oversight.
But Sam, I think the question is whether you were supposed to have access to these accounts to begin with. If I worked at a bank and was a bank teller, yep, and I decided to leave the bank at the end of the evening and take the cash that I ostensibly had access to, even if I intended to bring it back to the bank later, even with, yep, more money to give them back, I still stole the money.
I mean, look, I wasn't running Alameda. I didn't know exactly what was going on. I didn't know the size of their position. A lot of these are things I've learned over the last month that I learned as I was sort of frantically digging into this on, November 6th, November 7th, November 8th. Obviously that's a pretty big mistake on Mark. That's a pretty big oversight that I wasn't more aware. I think I was, scared of, I was nervous because of the conflict of interest about being too involved. Obviously that shouldn't have meant that I didn't have real oversight, or that, and it really shouldn't have meant that I failed to appoint anyone to be in charge of that oversight, that relationship. But I haven't been running Alameda. I haven't been, thinking about its finances. I haven't been, making those decisions. But as CEO of FTX, it was still my duty to make sure that someone was doing diligence. I was a large owner of it. That is true, and had a lot of exposure on that side. But
so why wouldn't you have been focused on it if, in fact, that's actually where the profits were?
Well, I don't know that that's where. I mean, I think Alameda had made trading profits over the last 2 years, but FTX had made profits as well. FTX had been a profitable, growing business, and that was more than a full-time job. I didn't have the bandwidth to run 2 companies at once. I didn't have the attention for it, and again, I was nervous about a conflict of interest between those 2, and so was pretty intentional about not being very involved in what was happening at Alameda.
When did the commingling of assets begin?
So, and again, lots of traders had open margin positions on FTX where they would have borrows of assets, where they would be short some asset against, against other assets as collateral. That being said, again, looking through this now, I think that position size for Alameda got substantially larger over the course of 2022. And that it was, I think, substantially larger by October of 2022, probably by July of 2022 than it had been in April.
But it sounds like it's fair to say that there was always a connection between Alameda and FTX, and almost, I mean, not almost, but from the very, very beginning, and then it never really stopped.
Well, I think it had been, in some ways, reducing. I mean, when you scroll back to 2019, Alameda and FTX were very connected in a number of ways. One of these was that Alameda was the primary liquidity provider on FTX. It was 40-something% of volume. It was the backstop liquidity provider. And you scroll forward to 2022, it was down to 2% of volume. We had a lot of backstop liquidity providers, but it still had a big margin position on. And I was failing to pay nearly enough attention to positions and positional risk on the exchange, and to Alameda's in particular. And I also, frankly, made a mistake that I feel pretty embarrassed to have made. I mean, a lot of these are, but I substantially underestimated what the scale of a market crash could look like and what the speed of it could look like, and how correlated it would be.
But that just suggests that you were just perhaps hoping against hope, that this would all work out and that nobody therefore would realize what this commingling was all about?
So it's not how I viewed it. And in particular, again, most of the firms had margin positions. Most of the firms had burrows on FTX. The problem here, this was too big. It was, I was surprised by the size of what it was.
But it's not just too big, it's assets that, look, it sounds like there were assets that may have been allowable to be loaned, but then there were assets that weren't allowable to be loaned, no?
So, I'm still looking into the details of some pieces of this, but I do think that in addition to what I had seen as sort of law of the standard burrows here, that when we scroll back to 2018, or to 2019, I guess, FTX didn't have bank accounts. It didn't have any bank accounts globally. We were trying to get them. It took us a while, took us a few years. And there are customers who wanted to wire money to FTX. And so I think in the meantime, some of them were wiring money to Alameda Research to get credited on FTX. And I think that was a substantial sum. And I think that the FTX's internal accounting did correctly, effectively try to debit Alameda for those funds, but it didn't happen in the primary account. And so it didn't happen, it created a discrepancy between the display of the account and what was really going on there. And I'm still looking into exactly how that worked mechanically. But that did make that position size substantially larger than I thought, and I think than what you would have gotten from most of the normal avenues.
And FTX was doing it knowingly because the know your customer rules were being flouted by using this separate vehicle.
How would that allow customers to flout the know your customer rules? Are you talking about people who are trading on FTX US, or are you talking about customers of FTX International?
International. You just said that there was money being sent to Alameda, and that Alameda was then providing credits onto FTX.
Right. But those users still had to go through the know your customer policy on FTX in order to do that. In order to use that ramp, customers still had to go through FTX's normal KYC onboarding.
So when do you think you knew there was a problem?
So, the time that I really knew there was a problem was November 6th. November 6th was, that was the date that the, tweet about FTT came out. And by late on November 6th, we were putting together all of the data, putting together all the information that obviously I should have put together way earlier, that obviously should have been part of the dashboards I was always looking at. And when we looked at that, there was a potential serious problem there. And Alameda's position was big on FTX. It had just taken a huge hit. It had taken hits over the course of the year, but that was a particularly, large and one and very abrupt. And we're seeing a run on the bank start, and that was leading to, $4 billion a day of client withdrawals. At that point, we started calling prospective, sources of financing because I was nervous about what was going to happen there. If you rewind even a few days, I was a little bit nervous, but not on nearly the same scale. And I was thinking about, risks that were substantially less.
When you say you were nervous, you were nervous the company was going to go under, you were nervous you were going to get caught. What were you nervous about?
On November 6th or before then?
Either.
So I think before then, what I was nervous about was that basically, and this started, I would say, November 2nd or so, when there was, Alameda balance sheet, through CoinDesk, and when I started to think a bit more about this, I was nervous that that would lead to substantial losses for Alameda, and that it would be a bit messy. I didn't think it was existential for FTX. I didn't think it was going to lead to a massive loss for FTX's customers. I was thinking of this as more like Alameda is going to be really tight on funds, and that maybe it would end up having some small impact on FTX, but not a significant one, not one that hurt customers at all. When you're talking about November 6th, late November 6th, then, and especially as we bleed into November 7th and 8th, I start to become nervous that FTX is not going to be able to fill customer withdrawals. And by late November 6th, I am very nervous about that, and I'm starting to think about emergency scenarios, and I'm starting to think about things might end quite badly here, and the core metric that I'm thinking of there is, will we be able to make sure all customers are whole? And on November 5th, I was feeling quite good about that. On November 7th, I was feeling quite uneasy about that.